Right, let's get our first contestants up, please. I'd like to introduce you to Matt Hammerstein, Managing Director of Barclays UK, and Mark Mullen, co-founder and Chief Executive of Atom Bank. Welcome both. Good to see you. Good to see you. Good to see you. Now, I think most people in the room will be familiar with Barclays, but perhaps less so with Atom. So Mark, why don't you just give us a thumbnail sketch of the business?
Sure. So we're a new bank. We were founded in 2014, authorized last year, and we've just started launching in the UK, offering savings, lending to small businesses, and very, very soon we'll be lending into the mortgage market. We're based in Durham in the northeast of England. We employ 240 people, and we're just beginning our journey.
Matt, do we need, a lot of people have said we need banking, but we don't necessarily need banks. I mean, when you see the starting of Atom Bank, do you think, uh-oh, this is the moment, send a shiver down your spine, we're going to be disintermediated? Because it's hard to think of a sector, more than finance and banking, where more people are taking aim at it at the moment. FinTech, you've got the Googles and Apples of the world, with finance squarely in their crosshairs. What do you do as an incumbent?
Well, first of all, much as I think the themes we just heard, we have to accept that the disruption that's happening is driven by our consumers and our clients rather than anything else. And so if we're not responsive to it, we're not going to have a reason to exist. So we've got to accept it, we've got to get on with it, we've got to proactively embrace and address the needs that they're very evidencing by wanting to do business with other people. The most significant thing, I think, for us is to both pay attention and be aware of. So we're very respectful of what people like Mark are doing in the marketplace and the consumer preferences that they're revealing as a consequence of what they bring to market. But we've got to make sure that we get our organization to be as nimble and as quick over time as the one that Mark's building, so that we can be responsive to those needs in real time and try to address them. We've also got to be much more inventive, because at the heart of at least the 326-year-old institution I work with is a lifespan of innovation, lots of firsts in the marketplace, and there's no reason in my mind why that can't live on even in the midst of the environment that we exist in today.
Mark, there's two things that strike me as problematic for you. One is that very few people change their banks ever anyway. They tend to stick with them, and whether that's because they trust them and they just, or like they like look at their checkbook, they just don't move very much. And size does confer some sort of, as we found out, not true in 2008, but we did see that size confers a level of security, a level of trust, which a new bank might not. Those are some of the things you're up against.
Yeah, they are, and they're inescapable truths, but size is also the thing that, caused our economy to catch a serious cold. If you think about the sort of asymmetrical risks that big banks have posed to, if you like, taxpayer welfare. So whilst we might, represent a risk in terms of the mind of a customer because they're not familiar with us, we certainly don't represent a prudential risk to anyone, whereas the same can't be said of, frankly, the concentrated banks that serve the UK economy today, because 5 of them, including one of our building societies, have pretty much got a lock on 80 to 85% of the whole show. And so I can't look at that and think, well, that's good for innovation or good for competition, because the impetus to innovate comes from competition.
So what are you actually doing which is innovative and disruptive? Aren't you just starting a new bank?
Well, yeah, but listen, don't underestimate that just starting a new bank is in and of itself a challenge to the incumbents, because there's not a whole lot of them out there. There's not a whole lot of them who are actually interested in manufacturing products and offering those products to customers directly or indirectly. And so that in and of itself is a pretty big mountain to climb. But other than that, we're also using technology, if you like, to govern the relationship between ourselves and our customers. And fundamentally, technology is going to shapeshift or transfer power from the banks and the existing banking model to the customer. The banking model is one based upon cross-sell. You join it when you're 9, you check out when you're 90, and like as not, you've probably stayed with the same bank all throughout that journey. And I want to use the phrase CBA. You can't be asked to switch from one bank to the other because, frankly, you don't believe they're any better. And so a combination of newness and technology and transferring power to the customer is what we want.
And what you mentioned 2008, the financial crisis there, when we found out how exposed some of these banks were. In the desire to make banking safer, you could say the regulatory hurdles to entry to this market got that much more difficult.
No, I don't think so. Actually, I think the regulatory hurdles for new banks have actually gotten better. Right? The regulator's woken up to the idea that just allowing concentration risks to continue is actually bad for customers and bad for everybody. It is a little worrying to read this morning that Lloyds are likely to take over MBNA, Because once they do, or if they do, then you've essentially got 50% of all the credit cards in force in the UK been manufactured by 2 banks. Whereas 6 weeks ago, the Competition and Markets Authority said that actually these banks were too expensive to break up. Well, you can't have it every way. You can't have those concentration risks on the one hand and then say, well, gee, it's too difficult to do it and about. So the regulator's actually doing its bit. It's introducing new competition. There's more to do.
What are some of the technologies you think will change the way that you're doing business? We've heard about blockchain. We've got some new fintech players. What do you think will be the transformational technologies that you're working on?
Well, I think just to play off Mark's CBA, I think the first and foremost is technology like just digital, which is ever present in our individual consumer lives, hasn't yet wrapped itself into all of industrial life. And so just using the technology that's already prevalent to make the customer experience significantly better than it's been historically, I think is a big part of what we're focused on right now, and I think a big opportunity, at least for the incumbents, and I know is a part of what Mark's bringing to market. 2, I think a lot of the technology that's evolving around your ability to both leverage and then bring to market, I guess, different data-based advantages that you wouldn't have been able to in the past is in allowing any institution, incumbent or otherwise, to be much more proactive and much more oriented at serving customers' needs. We have a proposition we just brought to the business market we call Smart Business, which is taking all of the information for our clients that go through their tills, whether customers using debit cards or credit cards, and giving that back to them in an anonymized way that allows them to think actively in a consultative way about ways they want to grow their business. And that's in fundamental ways allowing us to get back, if you will, to the spirit of what a bank should be about. We're not here to provide a loan. What we're here to do is help a business grow. A loan is just a means to that end.
What are some of the things, because there's been a lot of talk, the Prime Minister talked about it, Greg Clark's talked a lot about it, about that bit between when a company's a good startup and making it to a business of scale. There's an implied criticism that the current financial market or the tools at their disposal aren't working. What do you see for small businesses when they're on that journey to become a big business?
So access to financing is clearly a big part of trying to help businesses span the chasm you described, from startup to scale up, as if you use the vernacular today. There's other issues that they face, things like talent, leadership, access to exports, infrastructure, et cetera. On the finance side, it's a spectrum. The UK market, we're a bank, we don't do equity, we do debt. There's a lot of anxiety in the marketplace about why banks don't generally provide quasi-equity-like debt products. So 2 years ago, we started doing that. We've got a particular debt fund, £200 million now. We've lent £93 million of that to about 46 or 47 companies. It's specifically focused on fast growth companies that don't yet have the cash flow to justify debt financing. And historically, that's a type of risk that banks haven't stood ready to take. We're now actively taking. And that's just trying to bridge, if you will, between that seed investment that companies typically get at startup phase to a company that's more established with cash flows to be able to justify access to the serviceability requirement on debt.
Mark, you've been around 2 years or so. What were the bumps in the road, or where did you find that, where there's constrictions when you thought, blimey, I wish this bit was easier?
Well, apart from the entire 2.5 years, raising capital. It's still a very expensive business to get into, and you still need to have the right type of investors. We've been very, very lucky with BBVA, with Woodford, with Tosca, to have investors who understand the industry and have patience. So banking is not an industry where you want to make money in the short term. Every time a bank tries to do that, sure as eggs are eggs, then the disaster will follow shortly thereafter. Other than that, you've got to roll with it because things are going to go wrong, and they're going to keep going wrong. It's not just a once-only event. But if you persevere, and you have a little bit of luck along the way, then you might just make it. But to the point you've just asked, you know what? Entrepreneurs have got to cash in, not cash out. That businesses take a long time to build, stabilize, and grow. And too often, I think people are trying to get out before they're actually fully born. And I think that's a big difference between the US and Europe, that this is, don't make money in the short term, guys. Stick with it and grow it in the long.
So you think that in the UK, there's a culture of thinking about exit
too early.
Almost before you even started?
Too early.
I don't know if it's a culture. I mean, from our perspective, you definitely don't see the same structural reinforcing benefits put in place to encourage that to happen. So a lot of the big unicorns that have emerged in the US, there's been efforts put in place, I think, to help make sure that actually happens.
How does that happen? You've got $1 billion valued business and you don't sell out. I mean, why does it work in the US and it doesn't work here?
Well, I think two things. I think one is there's a recognition, I think in many respects, if you look at the US right now, one view would be that the business sector is more monopolistic looking than it has been in a very long period of time. You've got very big companies that have grown up on the basis of technology in particular that control the particular sector that they represent. And there's been an acceptance of the fact that in these markets, given the nature of technology, for a period of time, you may have to be willing to allow that to happen in order to be able to get that big national scale player.
My kids, brands like Barclays and Goldman Sachs mean nothing to my children. If they could open bank accounts with Snapchat, they would. Do you think that this is a juncture where you've lost a little bit of connection with the audience out there, and some of those brands don't quite connect in the way they used to?
So I definitely think the industry has through time, and that's, if you will, our fault as an industry for getting to a point where maybe the industry was a little bit more complacent than it should have been around how customers were making choices about which bank to choose from. And there was a period of time where most people picked their bank based upon which branch was most proximate to where they lived. Or the recommendation, as I think Mark alluded to, from a relative or somebody that they trusted. I do actually think the research that we would do is, I don't know what age your children are, there are people of certain ages that would make statements along the lines of, we're ready to go bank with the Snapchat. My experience, I think our experience when we do the research is, once they have money, their views typically change, because there's an emotional connection with your money that I think people leads to some of the CBA activity or belief system that Mark alluded to, which is that there's a deep, deep amount of trust as to who they want to and trust, if you will, protecting that money with. I think most people would still say the institutions they trust the most are their banks. They may not like the corporate
You sure
brand.
about that?
I have significant research to suggest yes.
Okay.
And so, that's what the risk we run is, are we doing everything we can to protect and enhance the trust that the customers and clients have in us to, as I said, make that experience as brilliant as it can be and otherwise enhance it using technology that's available. If I just go back to your point around technology and then access to finance, an example would be, we've recently, over the course of the past 18 months, introduced the possibility for all of our business clients to get access to lending via a proactively offered pre-assessed limit, both on online banking. Just 2 weeks ago, introduced that into our mobile banking application. In 2 weeks, we've seen the amount of lending on mobile banking represent about half of what we typically do in a month. And we didn't even promote it to those clients. So there's a big part of us trying to proactively go back out, using technology, using data to make customers aware of the willingness and ability that we have to support them to rebuild and reinforce the trust they have.
What about the role does data play and data security? I mean, these are the breaches that people really care about when my financial information is compromised. How do you manage that?
Well, I think everybody's got to keep a careful eye on that. I think it's the new stability risk, I would say. Of course, the banking industry in the whole is going to worry about financial stability, but I think data security stability is going to become the most important issue. And I think whilst there are institutionally specific concerns that every bank ought to have related to that, there's also a collective interest in it. When we get towards things like the CMA's remedies around open banking, it's a wonderful idea, fully support it and recognize the benefit that's going to come from the disruption of it, but it's going to expose a lot of people to risk. Most of the fraud risk, the predominant fraud risk that still exists in the world today, isn't bad actors, it's people. It's people clicking on the wrong link. It's people sharing data with people that they shouldn't share. There is, I think, a collective interest in making sure that we have a very significant effort to educate people better around the risks that they take every day with their own data to make sure that we don't have a collective failure and realizing the opportunity that things like an open banking standard might bring.
Okay. Let me finish with you, Mark. When I was reporting on the financial crisis from Canary Wharf and saw people take out their careers in cardboard boxes, and but I go back there now, and all the names on the doors are still the same. It's still Barclays, JP Morgan, Citi. Is one of those going to be Atom one day? What's the aspiration, and why? What will happen is, Matt here will just come off and make you an offer you can't refuse, and he'll buy your business.
Well, why are those big institutions still around is a question you should ask. They're still around because you paid for them, pretty much. You paid for them either directly or indirectly through QE. And because they're too big to fail, and that's unfortunate, but it's true. It's nice that Matt supports the open banking initiative and open data. It's better that Barclays don't actually get a choice because they actually have to comply, whereas other institutions don't, and that's because they're a dominant player. because the incumbents are never going to volunteer to open their data. They're never going to volunteer to allow new entrants in. One shouldn't expect them to. So the regulator has an enormously important role to play in driving competition and at least giving customers choice. And in respect of data security, equally the regulator is all over it like a bad suit at the moment because they absolutely understand that an open banking world requires multi-factor security. So I'm probably less worried about whether that, where that ends up than Matt might be. In the end, customers get to decide. It's a democracy, and frankly, the internet is going to require greater transparency. It's already happening. Greater ease, greater speed, and lower cost. If you build a business model that's inherently reliant upon a lack of transparency or cross-sell or cross-subsidization or lost leadership, I think you're going to get found out in the end. Whether you like it or not, the big business models, the big banks are all built on that type of revenue. And that revenue is being unpicked piecemeal, and that's a unidirectional, if you like, mode of travel. So whether we'll be successful or not will come down to whether we can be easy to deal with, be transparent, be low cost, and be fast. And the customer makes that decision, not us.
Matt, any thoughts on that? Any closing thoughts?
Well, the only thing I would say is I think, again, to the earlier comments, just so that it's specifically clear about us institutionally, not only did we voluntarily support the open banking standard, I co-wrote the paper that led to the CMA's recommendation. So,
good on you.
We're embracing it.
Matt Hammerstein from Barclays UK, Mark Mullen from Bank. Thank you both very much indeed. Thanks a lot.
I think we just got it.